So yeah, and jobless claims have fallen again to the lowest level sort of ever, as the government would have you believe, but that's not the real story. The non-manipulated numbers are at the highest level since January. Now, what does it mean for interest rates? What does it mean for tech stocks? And what 3 action steps can you take right now to profit from what's about to come and what is over, you might be wondering. Before we get into that, let me encourage you to do one thing and one thing only, and that's sign up for our live trading training. I'll give you my entire playbook, my entire trading strategy. We'll do some live trading together as well. It's completely free of charge. There are about 500 of the 1,000 spots still available, so jump on it. felixfriends.org/webinar. Let's look at the numbers. So officially, unemployment is down once again. Jobless claims have fallen again. The jobs miracle, the US economic miracle is alive and kicking. Well, that's probably because there's an election coming up, isn't there? I think there is an election coming up. I heard a thing or two about that. Now, what's actually the real indicator if you want to figure out what's happening in the labor market? I think the best indicator is something called the Small Business Credit Conditions Availability of Loans indicator. I know it's what you read every morning too, right? You've got something in common. And I put a chart on here on the screen for you, and what you see is in green, you see initial jobless claims. That's the official, seasonally adjusted data the government puts out. And then in red, you've got the small business credit conditions. And the difference, the gap between the two has never been wider. In 2000, it was also pretty significant, as in no one could get a frickin' loan, but there was still full employment, and then employment suddenly cataclysmically imploded. Is that what we're going to see here? Possibly yes, possibly no. And there's a reason for that. The guys in Washington used to spend, that's the federal government, by the way, the Muppets in charge, they used to spend $4 to $4.5 trillion every 12 months on keeping the lights on in the country, right? It only costs $4.5 trillion. That was before COVID, and that was already after a massive expansion in expenditure under Obama and Trump. Now, after COVID, and after all the stimulus to everything programs have basically died out, we're spending 6.7 trillion. So we're spending about 50% more. And I say we, it isn't my money. I'm not American. I don't pay tax in the US, but your money. You're spending 50% more of that on, not quite sure what, honestly. You noticed a massive uptick in the services the government delivers? Probably not. That's the way government works. It's going somewhere, into somebody's pockets. And that's, of course, the reason, that extra 50% expenditure, why there isn't a recession. They're just permanently bailing out everything. And it also means, though, that even though the government does its best to hide the real state of the non-bailed out economy, the Fed isn't stupid. And the Fed is realizing that under the hood, stuff is collapsing. Manufacturing data also just out is just a horror show, 10 months of declines. And yes, people are losing their jobs, just not that many, because the government makes sure that everybody gets employed. And biggest increase in employment last month was the federal government, once again, in its infinite wisdom to fight inflation, right? But like the Inflation Reduction Act, let's spend some money, that'll reduce inflation. No, you're the problem. But anyway, let's move on. So how can you ensure that you benefit from this? Well, what's going to happen here is there'll be no more interest rate hikes, except for the one coming. That's that done deal, and that's it. And then there'll be no more. And interest rates will start to come down. And how can you make money out of that? Well, number one, buy bonds. This is the last chance, and this isn't financial advice, but I'll run you through the theory here. The last chance to buy bonds is right now. What's the theory? Say you buy a 20-year government bond, US government bond, and interest rates go down 1%. That government bond will increase in value somewhere between 15 and 20%. That's a pretty good investment, right? If you think interest rates are going to go down. I think interest rates are going to go down. Not today, not tomorrow, but at some point in the near future. Obviously, you need to have the time horizon to hold that bond. Otherwise, you're screwed. It's not a be rich by Friday kind of a scheme. Secondly, I DCA into great stocks. And what do I mean by that? I buy the companies that are not talked about that much. Give you some ideas, and again, this is not financial advice, but do some digging on them. Procter & Gamble, Johnson & Johnson, Graco, MasterCard, Waters, Pepsi, McCormick, Mettler Toledo, a lot of like really sexy businesses that are not talked about that much, that have great margins, that have a big moat. What do I mean by that? They have the ability to dictate prices. Pepsi raised their prices 17% at the beginning of the year. People bought more Pepsi, right? That's a good thing because, well, they're selling an addictive drug that kills people essentially, but, you know, it makes me money. And then number 3, invest in yourself. If you spend 100 hours a year learning how to invest, that's 18 minutes a day, by the way. If you spend 100 hours a year or 18 minutes a day on how to become a better investor, you will be, by the end of the year, one of the top 5% of investors out there. And that's the statistic that applies to any skill, by the way. If you want to be a pianist or a swimmer or a climber or anything, you do 18 minutes a day, you'll be in the top 5% of the world. So not so hard, is it really? You just need that determination, you need the drive, you need the burn, you need the desire. If you have that, then you can do it relatively easily with relatively little time spent. And that's why I'm in the park right now, because I'm about to find a tree that I can hang off, not by the noose or by the neck, but otherwise do some exercise. And again, I do that every single day, no matter what. And it means I'm in good shape. I feel good. I feel happy. I've got lots of energy. Nothing aches or creaks. And I would really encourage you to do the same thing with your money. But you've got to do the money probably first. And then the time freedom kicks in, then you've got more time to exercise. Ideally, you do both at the same time. If you enjoy this little rant, come and join me on Tuesday live. My full live trading training takes place on the 25th at 11 a.m. Eastern time. And we'll do some live trading together. I'll show you everything I do, how I find 85% probability trades, how I do that in 3-4 hours a week, and how it's tremendous fun. And I wish you a beautiful day. If you're wondering where Winston is, he's out with his pack. He left me to it. Just me alone out here. I know, very selfish, but anyway, he's having a great time. See you later.